Gold is consolidating, so no surprise to me to see silver consolidate for a while. I'm less feeling urgent about silver because of this potential near-term buying opportunity. I'm not making a bear case. I'm just saying very nearest term, you asked me, and I'm telling you, yes, I think it could go lower. Not will, could. But it still tracks gold. And any different kind of news could make gold go up, and I don't think silver would just ignore that. And apart from the short-term noise, I am very bullish on gold and silver as monetary metals. I'm also very bullish on copper and silver. If it has its industrial side, you can ignore it if you want, or if you pay attention to it. Well, then how can I be bullish on monetary metals and bullish on copper and not be bullish on silver?
Silver doesn't move in a straight line, and anyone chasing it unthinkingly risks being caught off guard. Lobo Tiggre, CEO of IndependentSpeculator.com, isn't bearish, but he sees short-term turbulence ahead. The ripple effects of Trump's economic policies are still being felt throughout the system, creating potential headwinds for industrial metals like silver and copper. That's not to say a crash is coming, just that silver could dip before the next leg higher. Part of the volatility is structural. Silver's market is roughly 1/10 the size of gold's in both daily trading volumes and annual end-use demand. That smaller scale makes price swings more dramatic. On average, silver is 76% more volatile than gold. Even when safe haven demand provides a floor, the ceiling can remain firm if inflation readings surprise to the upside. Here's Tiger's perspective. Silver straddles two worlds. It's both a monetary metal, like gold, and an industrial metal, like copper. If I'm bullish on gold as money and bullish on copper as a critical industrial mineral, it doesn't make sense not to be bullish on silver, he says. That dual role makes it uniquely positioned to benefit from both safe haven and industrial demand over the long term. Timing, he emphasizes, is everything. During the last surge toward $39, Tiger warned against chasing prices higher. That patience rewarded buyers who waited for better entry points. He's applying the same logic now. Rather than buying at multi-year highs, patient investors should look for opportunities when silver dips or consolidates. Over time, the combination of industrial utility and monetary demand should keep silver on a steady upward trajectory. Short-term fluctuations may test nerves, but for those willing to stay the course, Tiger expects silver to reward long-term holders handsomely. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that understand what's unfolding. Thanks for watching.
I'm not actually bearish on silver. I am worried that its industrial side in the near term, as Trump shock continues to work its way through the economy, it's really striking. As you and I speak right now, as we record today, we just got the CPI report, which, every time that stupid thing comes out, the CPI or whatever you want to call it, right? Every time that thing comes out and CPI is higher than they expect, they say, oh, but that doesn't matter. It's the core inflation number that matters more. So this time, CPI comes out still high, but flat from the month before. But right. The core number goes up more than expected, goes up over 3%. We can't just say that inflation is closer to 3 than 2 on the Fed's more serious measure. I mean, it went over 3. And no, like crickets, nobody's paying attention. The Wall Street, all three of the major indices zoomed today, and everybody and all the talking heads on financial media was, oh, this is great. Inflation is tame. Like, are you on what planet? I know that PCE is the one the Fed says that matters more, but of the CPI numbers, according to the Fed, the core CPI number matters more, and the expectations were for it to go up to 3, which is bad enough. And so for it to go even higher to 3.1, that was a big deal, and just nobody cared. Lynn Alden's "nothing stops this train" thesis, you could just see that on Wall Street today. Like, just all that money's got to go somewhere, and all that FOMO and chasing and all that liquidity, to use Michael Howell's expression. I just think in terms of money helicopters. I'm a simple wolf, and you could just see it on days like today where it just makes no sense. That to my mind is evidence of that money just has to go somewhere, and any excuse to go long, to go risk on, it's just crazy. But anyway, where I was going with this is the broader markets are ignoring, I think, clear danger signs. And even if you're 100% in favor of everything Trump is doing, that doesn't mean that it will be easy, or that the transition that he's trying to engineer, which truly is historic, will be painless.
Right.
That is near-term bearish for copper, which I'm very bullish on, all industrial minerals, and silver does have its industrial side. So the answer to the question is, gold is consolidating, so no surprise to me to see silver consolidate for a while. I'm less feeling urgent about silver because of this potential near-term buying opportunity. I'm not making a bear case. I'm just saying the very nearest term, you ask me, and I'm telling you, yes, I think it could go lower. Not will, could. But it still tracks gold. And any different kind of news could make gold go up, and I don't think silver would just ignore that. And apart from the short-term noise, I am very bullish on gold and silver as monetary metals. I'm also very bullish on copper and silver. If it has its industrial side, you can ignore it if you want, or if you pay attention to it. Well, then how can I be bullish on monetary metals and bullish on copper and not be bullish on silver, which is a critical mineral? It's used for the same electrification and all that other stuff, right? I don't need to tell silver bulls, all the use cases for silver, right? So, I mean, I'm very bullish. I'm just cautious about rushing in, or all those people who got mad at me for not cheerleading and saying it was going to the moon when it 39. Oh, okay. Well, the people who did listen to me got buying opportunities instead of high, right? So that's all I'm saying is, when that bull starts going, we'll all be so happy. Maybe it doesn't matter that much. If you're long, I think you'll do well. But it's not my nature to tell people to pile on to something that's just hit a multi-year high. I'm always trying to buy low and sell high.
Lobo Tiggre points to the recent CPI report as a perfect example. Core inflation came in hotter than expected, climbing above 3%. That should have been a warning sign, yet Wall Street barely blinked and rallied instead. To me, that's just another sign of money needing somewhere to go, no matter the fundamentals, Tiggre says. Liquidity and FOMO are driving risk-on behavior, even when economic indicators are screaming caution. However, the story changes when you examine silver and gold stocks. These aren't the metals themselves, they're leveraged instruments. Small swings in silver or gold prices can create outsized moves in the equities. A 3 to 4% dip in silver could turn into a significant buying opportunity in mining shares, but only if you have the discipline to act when the market seems chaotic. Tiggre stresses a key point. Self-awareness is critical. You have to know yourself, he says. Can you watch a temporary loss and still add to your position without panicking? Many investors can't, and that's why he avoids giving blanket advice. Timing, patience, and emotional control are as important as market analysis. In his view, the best opportunities often come to those willing to wait. Patience allows you to enter at favorable levels, avoid unnecessary stress, and take advantage of leveraged moves without being burned by short-term volatility. Let's get back to the interview.
Well, I don't want to upset the Trump fans, but honestly, Trump and Putin having this meeting, what could possibly go wrong? A lot.
Right.
Maybe we get peace in Ukraine out of that deal. Zelensky's clearly telling us not to hold our breath on that.
Right.
But that could get pretty bad. The situation in Gaza, that has been fairly contained so far, and Israel taking out so much of Iran's defenses. That whole thing could have become World War III in so many ways, and it didn't. But I don't think it's safe to assume that just because it hasn't happened so far, it won't.
Right.
Right. And then so I guess what I'm saying is the geopolitical stuff. If things go wrong with Trump and Xi as well. I mean, I'm hoping none of this happens. But this is one reason why I do stack physical. Is there are scary things in the world that if any of them goes wrong, I'll be very, very glad to have something besides stock certificates. If you don't realize the loss, you're okay. But how will you feel, right, if that happens?
Right.
I mean, so that's all I'm saying. And you know what? If you've got the staying power, if you're the kind of person that you can buy a whole bunch and then see it go down, and by the way, I'm not just talking stacking. Stacking is a permanent yes for me. Bullion, there's never a time that I wouldn't want to have more bullion or accumulate more bullion. But
absolutely.
When I'm making money, I'm talking about the silver stocks, right? And the gold stocks and silver stocks.
Right.
And the leverage that those give, when silver goes down 1%, the stocks go down 5%, right? So if we get a 3 or 4% retreat in silver, we could get a massive buying opportunity. And if you if you know yourself, if you look in the mirror and you know that I'm the kind of investor that I can handle that and not, get upset or just
Right.
buy more, fine. But a lot of people honestly aren't like that. And as a public person who people, I don't want to be the guy who says, yeah, yeah, buy, buy, buy. And then next week it's on sale. And then people are like, you said it. But when gold goes back into circulation as money, that silver may not necessarily do so. And it's
Right.
not like silver. It's not because I'm bearish on silver, but just because in today's world, people aren't going to go around with a medieval coin purse clanking coins around. It's going to be transferred electronically. So you don't
Absolutely.
really need silver to make change for gold. But people just don't want to hear that. Silver is money. I'm evil if I say anything besides, medieval coin purse full of silver coins, I suppose. I don't know. But that was what really got me named Darth Silver, was that argument that silver may not go back into circulation. Now, if we get a Mad Max type scenario, heaven forbid, but if we did, absolutely, that's one reason why you want to make sure you stack some silver, have some junk silver around too to make change. Like at some point that might actually happen. I hope to heck it doesn't.
Right.
But, I've got my stack there in case it does. But reasonable people, I think, should be able to agree on this.
Oh,
The
yeah.
other thing, though, is that I'm just, if you say anything other than it's going to the moon tomorrow, like somehow that makes you bad. Darth Vader's brother, which is where this whole Darth thing came from.
Right.
And just recently, with silver hitting 39, bouncing off, hitting 39, people got so mad at me for talking silver down. Like I personally have the power to ruin the silver market. Right?
You work
Like,
at the COMEX.
because I didn't say, yeah, the next stop's 150 or something. Like,
Right.
Get real, folks. And I see my job as a due diligence guy is to try to help people as I best I can. If the objective is an ideological one to restore silver to its rightful place as money in the world or something, fine. I've got no problem with that. But that's not my job. I'm not an ideologue, to preach the virtues of silver. I'm here to try to help people make money.
Yeah,
And if
absolutely.
I had told people when silver hit 39, yeah, this is it, go all in, it's going to the moon, they would have lost money. Well, depending on what they did, especially if they did options or something like that, they could have lost money. So that's where I'm coming from. I'm not trying to rain on the parade. I'm not trying to be the stick in the mud. I'm just trying to help people make money, avoid losses, and don't let your excitement, cloud your judgment.
Silver is holding steady near $38.10 an ounce after a volatile session, following gold's rebound as U.S. Treasury yields eased. Investors are now weighing two significant influences: geopolitical developments in Washington and the Fed's Jackson Hole Symposium. President Donald Trump is meeting with Ukrainian President Volodymyr Zelensky and European leaders to explore peace negotiations with Russia. Reports suggest Moscow may cede some territory in exchange for concessions from Kyiv. While the outcome remains uncertain, the prospect of progress has injected caution into markets. For silver, which serves as both a safe haven and an industrial metal, geopolitical events often drive short-term price fluctuations. On the monetary side, attention is firmly on Fed expectations. Economists are anticipating a September rate cut, the first of the year, with a potential follow-up in December. Lower rates typically weaken the dollar and reduce Treasury yields, creating a favorable backdrop for non-yielding assets, such as silver. The combination of geopolitical uncertainty and dovish monetary policy is keeping traders alert. Short-term volatility may continue, but the underlying factors, safe haven demand and industrial consumption, remain supportive for silver. This mix of macro events highlights why silver can swing sharply even when broader markets are relatively calm. Investors are closely watching both Washington and Jackson Hole, aware that even slight changes in policy or international negotiations can translate into significant movements for the metal. Silver's dual identity is creating a market of contrasts. Its role as both an industrial input and a monetary asset ensures it reacts to multiple forces at once. Geopolitical developments, policy signals from the Fed, and structural market characteristics all combine to create pronounced swings that can test even seasoned investors. Yet, beneath the short-term turbulence, the long-term trajectory remains intact. Industrial demand continues to grow, safe haven flows persist, and central bank awareness of precious metals remains strong. The challenge lies in timing and discipline. Those who navigate temporary dips with patience and a clear strategy may be positioned to benefit from leveraged opportunities in mining equities and the metal itself, while impulsive moves risk undermining gains. Ultimately, silver's path underscores a market where macro dynamics, investor behavior, and structural scarcity intersect, offering both risk and reward for those willing to stay engaged. Could the interplay of industrial demand, geopolitical developments, and monetary policy set the stage for silver's next significant advance despite short-term swings? So stay tuned. If you're into real, data-backed takes on the financial system, hit like and subscribe so you don't miss the weekly updates. Additionally, if you are interested in Bitcoin-related news, consider subscribing to our other channel for more updates. Thank you for the support, and I hope you enjoy the video.